See, till now we have discussed 7 problems on ratio analysis. So now let us see next one, problem number 8. Problem number 8, ratio analysis chapter. The following are the summarized profit and loss account of Jyoti Limited for the year ending 31st March 2016, and the balance sheet on that date is as follow. So now here they have given you some of the balance sheet items. So now that we need to see here. If you see, first they have mentioned you profit and loss account, then they have given you balance sheet. So now let us discuss profit and loss account item. So if you see the debit side of profit and loss account, there is opening stock they have mentioned. Then there is purchases made during the year, it is given. Direct expenses in connection to that purchase, that is also mentioned. Then gross profit is given. If you see the credit side, there is a sale and there is a closing stock also mentioned. Then gross profit is brought down. See, this gross profit is there again. Then some of the expenses regarding profit and loss account, that is, first is operating expenses they have given you separately, and non-operating expenses they have mentioned you separately. If you see under operating expenses, there is selling expenses and administrative expenses, and if you see non-operating expenses, there is loss on sale of asset. Any sale of asset, any loss, it is non-operating in nature. If you see this side, credit side, non-operating income, interest, they have just mentioned you interest, non-operating income. Similarly, profit on sale of share, again it is not directly connected with business activity, that is why it is non-operating in nature. Profit on sale of share is also given. So if you see the P&L total, that is 3,49,000, both the side it is mentioned. So after this P&L account, there is balance sheet also given. So that balance sheet also we need to see here. Balance sheet as on 31st March 2016. If you see now asset side, again usual items are mentioned. Building and machinery, that is fixed asset. Stock, debtor, bank, current asset. So we have categorized asset side information. Liability side, again if you see, there is share capital and reserve and profit and loss account. These three items are shareholders fund. Then there is a current liability, that is also mentioned. So what you are required to calculate? You are required to calculate these 6 ratios: gross profit ratio, net profit ratio, operating ratio, current ratio, acid test ratio, operating profit ratio. So here one thing you can understand by seeing the question, that is operating ratio is different and operating profit ratio is different. So there is a different formula for operating ratio, operating profit ratio, there is a different formula. Then one more thing here, they have given you P&L and balance sheet, right? So we have to use all those items while solving the problem now. So first one, let us see gross profit ratio. So formula for gross profit ratio, if you see, that is gross profit divided by net sales into 100. So if you see here, gross profit is directly given in the P&L account. P&L account, if you go through, then you will understand, that is in the question itself they have mentioned 3,40,000 is our gross profit. Similarly, there is a sale information, directly they have mentioned sale. So there is no sales return given in the P&L account. So we'll assume that this sale minus sales return, that itself is a net sale. So here in this question, sale itself is a net sale. So we know that net sale amount also. So here gross profit we know 3,40,000 divided by net sales, it is also given in the question 8,50,000 into 100. So our gross profit ratio is 40%, or else you can say 0.4:1. So after calculating gross profit ratio, next we need to see net profit ratio. So formula for net profit, that is net profit ratio, is net profit after tax divided by net sales into 100. So now we need to see whether net profit information is given in the P&L account. It is mentioned, see this, just below the non-operating expenses, after entering all the operating as well as non-operating expenses, any profit remaining is considered as net profit. That is mentioned at the end of P&L account, that is 1,50,000. so this net profit itself is the profit after tax. So that is net profit after tax, 1,50,000 divided by sales, we know that is 8,50,000. so net profit ratio formula, net profit after tax divided by net sales into 100. so 1,50,000 directly given divided by 8,50,000, that is also mentioned, into 100. Answer is 17.65%. so again this you can express in terms of ratio, that is 0.17:1. How to mention it in terms of ratio? 17 divided by 100, that's it. 17 divided by 100, 0.17:1 you will get. So after calculating these two ratio, gross profit and net profit, next thing we need to see is operating ratio. So now operating ratio formula, if you see here, that is cost of goods sold. So first we need to get cost of goods sold, then we need to identify operating expenses. So cost of goods sold plus operating expenses divided by net sales into 100, you will get operating ratio. So now what is the formula for cost of goods sold? So either you can calculate cost of goods sold, that is sales minus gross profit, you will get cost of goods sold, or else what you can do, you can just look at the profit and loss account. You need to add the items which is given in the profit and loss account. That is, first is opening stock plus purchases if you add, plus direct expenses if you add, and from this you need to deduct the closing stock. Add all debit side item, opening stock plus purchases plus direct expenses minus closing stock. So this is a general formula to calculate cost of goods sold. You can consider all the items just before the gross profit, you can say here. So now let us see now how to get the cost of goods sold here. Cost of goods sold, first one we got 99,500. so this 99,500 is nothing but, if you see the question, that is opening stock plus purchase. So purchase amount is 5,45,250. Similarly, direct expenses also you need to add, that is 14,250. Then from these three items you need to deduct the closing stock amount. What about sales? Sales doesn't come, so closing stock amount 1,49,000 you need to deduct in order to get the cost of goods sold. So 99,500 plus 5,45,250 plus 14,250 plus 14,250, then you need to minus, that is 1,49,000 closing stock. You will get cost of goods sold as 5,10,000, or else you can again cross check this one with the help of another formula. So now let us see that P&L account once again. If you know the sales information, that is 8,50,000 minus gross profit, you will get the cost of goods sold. That is nothing but 8,50,000 minus 3,40,000, that is 5,10,000. both answers are same. So either you can use this formula, that is opening stock plus purchases plus direct expenses minus closing stock, or else you can use sales minus gross profit formula in order to calculate cost of goods sold. Now next thing is operating expenses we need to calculate. So in this question, if you see profit and loss account, they have mentioned operating expenses. They have given you separately. See this, under operating expenses there is selling expenses, they have mentioned 45,000. Similarly, they have given you administrative expenses, that is 1,50,000. so operating expenses is nothing but selling expenses plus administrative expenses. If there is a financial expenses, again that also you can consider under operating expenses. So now operating expenses total, if you see 45 plus 1,50,000, that is 1,95,000. so now we got cost of goods sold as well as operating expense. Net sales, anyways we know, we have calculated net sales for previous problem, that is direct directly from the question you can take the sales amount. So now just substitute the amount in the formula given for operating ratio. So now cost of goods sold, that is 5,10,000 plus operating expenses, that is 1,95,000. Why 1,95,000? Selling expense plus administrative expense divided by net sales, that is 8,50,000 into 100. So now numerator total, that is 7,05,000 divided by denominator total, that is 8,50,000 into 100. So our answer is 29.41%. So or else you can say that is 8.29:1 in terms of ratio. So now after discussing this third one, operating ratio, now let us see the fourth one. Fourth one is current ratio. Again, current ratio formula, very simple formula. We know that current asset divided by current liability into 100, if you do, you will get current ratio. Current ratio and working capital ratio is one and the same. So working capital ratio, if they have asked, then same formula you can use. If they have asked you to calculate working capital, then you need to deduct current liabilities from current asset. So that also you need to keep in mind. So now current asset, if you see here in the balance sheet, now let us see the balance sheet. Only three items concerned we need to take for current asset calculation. That is, one is stock, that is 1,49,000 they have given you. Then debtor, that is 71,000, bank 30,000. Add all these three things, 1,49,000 plus 71 plus 30. So you need to write that amount in the numerator. So numerator amount is nothing but, if you see, that is 2,50,000. Similarly, current liability, if you see the current liability directly given in the balance sheet, that is 1,30,000. Usually they give you creditors and bills payable as current liability, but in this question they have given you directly, so you can consider that. What about all other three above the current liability? That is nothing but shareholders fund. So now just calculate current ratio, 2,50,000 divided by 1,30,000 into 100, you will get 192.31% as current ratio. So that is nothing but 1.92:1. Similarly, next they have asked you to calculate acid test ratio. If you see the acid test ratio here, that is nothing but liquid ratio. Acid test ratio, quick ratio, liquid ratio, all are same. So now formula for liquid ratio is liquid asset divided by liquid liability. So now liquid asset is nothing but current asset minus stock minus prepaid expense. So here, excluding stock, only two items you can enter under liquid asset, that is nothing but debtor and bank. 71,000 plus 30,000, if you do, you will get 1,01,000 as the amount in the numerator for liquid asset. Next you need to calculate liquid liability. Again, in this question only current liability information is given. Liquid liability formula is current liability minus bank overdraft. So here current liability itself is the liquid liability, so let us write that same amount in the denominator. So now acid test ratio answer, 1,01,000 divided by 1,30,000 into 100, that is 77.69%, or else in terms of ratio 0.77:1. So now we have calculated almost 5 ratios. Now last thing they have asked you to calculate is operating profit ratio. So this operating profit ratio formula is not mentioned in your syllabus, but sometimes they asked in the examination this operating profit ratio. If you see, operating profit ratio formula is operating profit divided by net sales into 100. Or else you can use alternate. There are many formulas to calculate operating ratio, but this is a most suitable formula I can feel. So that is operating ratio, operating profit divided by net sales into 100. So how to get the operating profit? There is one more formula you can use to calculate the operating profit, that is gross profit minus operating expenses. So we know, if you see the P&L account, there is a gross profit information available. So that gross profit information information is 3,40,000 minus operating expenses. Immediately after calculation of gross profit, there is operating expenses given, that is 1,95,000. So now 3,40,000 minus 1,95,000 you need to do. So here answer, what is the answer for operating profit? That is 1,45,000. Why we are deducting expenses? Because from the profit, from the gross profit, if you deduct the expenses, you will get the ultimate result, that is operating profit 1,45,000. So now net sales, again net sales we know that is nothing but 8,50,000. With the help of this we can calculate operating ratio, that is 1,45,000 divided by 8,50,000 into 100. Answer is 17.05% or else 0.17:1. So any doubt in this problem? So this type of problem you can expect for 12 mark. So tell me, any doubt in this problem, any question in this problem? Yes. Ashish, Pramod, Pratish, Shifali, Rajat, I hope everyone understood this problem. Yes, so in this chapter now last one problem is remaining. So that is a 24 mark problem. Usually they don't ask 24 mark question. If you see the past 5 to 6 year question paper, there is no 24 mark question, only 6 and 12 mark question. Sometimes they'll ask you theory question as well for 12 mark from this chapter, ratio analysis and limitation of ratio analysis. So now let us see that 24 mark question. See this: from the following financial statement of Star Limited, you are required to calculate all the ratios which are given in your syllabus. Whatever the ratios they have mentioned you in the syllabus, all those ratio you need to calculate. So liquid ratio, working capital ratio, operating ratio, proprietary ratio, debt equity ratio, net profit ratio, stock turnover ratio, capital gearing ratio, current ratio, gross profit ratio, debtor turnover ratio, creditor turnover ratio. So after this they have given you profit and loss account information. See this now, profit and loss account, there is opening stock, there is purchase, there is manufacturing expenses, and there is a gross profit and closing stock and sale information is given. Then there is administrative expense, selling expense, debenture interest, depreciation. There are 4 expenses they have given. Then there is a loss on sale of motor car, so loss on sale of assets. So this is, you can consider as a non-operating expense, or non-operating expense you can consider this loss on sale of motor car. Then gross profit, this credit side, dividend on investment is mentioned. Similarly, profit on sale of furniture is also given. Then there is a provision for taxation and net profit balance is also given in profit and loss account. So after this there is a balance sheet. See this now, balance sheet is also mentioned. So now in the balance sheet there are various items. Now asset side item we need to see goodwill. This is intangible asset. Land and building, plant and machinery, furniture, all these 3 things are fixed asset. Stock, bills receivable, debtors and cash at bank, these 4 things are current asset. Then liability side, if you see equity share capital, preference share capital, general reserve, profit and loss account, all these 4 things are shareholders fund, or else you can say equity shareholders fund. 10% debenture is there, right? That is long term debt, or else you can say fixed interest bearing fund. So if you see the fixed interest bearing fund, that is, one is debenture and second one is preference share capital. Then provision for tax, bills payable, bank overdraft, creditor, these 4 information is nothing but current liability. So current liability information, provision for tax, bills payable, bank overdraft, creditor, current liability. So now one by one we need to solve the ratios. Now see this, there are 2 information we know, P&L and balance sheet. Now as per the question we will see the information and we will try to solve the problem. So now liquid ratio. So first one they have asked you to calculate liquid ratio. So liquid ratio formula we know, liquid asset divided by liquid liability. So now directly from the, by seeing the asset side, you can understand here liquid asset. there are 4 assets that is current in nature: stock, bills receivable, debtor and cash at bank. Among these 4, only 3 are liquid, that is excluding stock, that is bills receivable, debtor and cash at bank. 30,000, 1,50,000 and 2,20,000 you need to write in the numerator, only 3 items: bills receivable, debtor and cash at bank, divided by liquid liability. Liquid liability, if you see, there are 4 items they have mentioned here, that is current liability in nature: provision for tax, bills payable, bank overdraft and creditor. But we know the formula, that is current liability minus bank overdraft is liquid liability. That means among these 4 items, only 3 are liquid liability: provision for tax 1,76,000, bills payable 1,24,000 and creditor 2 lakh. See this, we have written that amount in the denominator. So now answer for liquid ratio is 4 lakh divided by 5 lakh into 100, that is nothing but 80%. 0.8 is to 1 you can say liquid ratio answer in terms of ratio. Second one is working capital ratio. So working capital ratio, we know that is nothing but current ratio. Current ratio and working capital ratio is same. So if you see current ratio formula, you need to write here: current asset divided by current liability into 100. So now current asset, if you see, I have already told you there are 4 item current asset. In the previous this one item, that is liquid ratio, we excluded stock, but in the case of current asset we have to include the stock as well. So now inclusion of stock 6 lakh and all other things are same: bills receivable, debtor and cash at bank same. So now current asset total 6 lakh plus 30,000 plus 1,50,000 plus 2,20,000, you will get 10 lakh in the numerator. Denominator current liability. Current liability, there are 4 items, so now you have to include bank overdraft as well. So in the liquid ratio we have excluded bank overdraft, but in the current liability, that is working capital ratio, you need to include the bank overdraft. So now there are 4 items, that is 1,76,000, 1,24,000, 2 lakh and again 2 lakh. So if you add this, you will get current liability as 7 lakh. So now working capital ratio answer, that is 10 lakh divided by 7 lakh into 100, 142.86% or 1.43:1. So now we calculated liquid ratio, then we calculated working capital ratio or current ratio. Next they have asked you in the question to calculate operating ratio. See this, now operating ratio formula we know, that is cost of goods sold plus operating expenses divided by net sales into 100. So now cost of goods sold, will apply the shortcut method here, that is nothing but sales. See this, sales value 20 lakh, gross profit 5 lakh. Directly if you minus these 2 items, you will get cost of goods sold, that is 20 lakh minus 5 lakh. Sale minus gross profit, you will get cost of goods sold. 20 minus 5, 15 lakh is our cost of goods sold, we know. Then operating expenses we need to identify. So operating expenses, if you see here in the P&L account, they have given you administrative expense, selling expense, debenture interest, depreciation. So these 4 items we can consider as operating expenses, since it is mentioned in the reference book also. They have taken these 4 items. So let us take this 4 item as what operating expenses. So 75,000 administrative expenses, selling 50,000, debenture interest 20,000, depreciation 60,000. What about sale of motor car? That is non-operating expense. So now we know the operating expenses as well. See this, so now cost of goods sold total, that is 15 lakh. Here they have applied the method of opening stock plus purchases, manufacturing expenses and minus closing stock. You can apply sale minus gross profit, both are same. So operating expenses total, you see here, that is adding all those 4 expenses: administrative, selling, depreciation, interest, debenture interest, you will get 2,05,000. So these debenture interest, you can say it's a finance cost. So financial expense also sometime you can consider under operating expenses. So now operating expenses and cost of goods sold total we want. So that is nothing but 15 lakh plus 2,05,000, that is 17 lakh 5,000. See this formula is cost of goods sold plus operating expense. That is why our total becomes 17 lakh 5,000 divided by what? Net sales, divided by net sales. Sales information we know, that is there in the P&L account, that is 20 lakh. So divided by 20 lakh into 100. 100. So just you need to now apply the formula here. 17 lakh 5,000 divided by 20 lakh into 100, answer 85.25%, or else you can say this is nothing but 0.85:1. Next they have asked you to calculate proprietary ratio. Proprietary ratio is nothing but shareholders ratio. So shareholders fund we want. Next thing we want is total tangible asset. So shareholders fund, if you see the question here, shareholders fund, if you see, there are only 4 items: equity share capital, preference share capital, general reserve, and profit and loss account. Add all these 4 things, that is 10 lakh plus 5 lakh plus 1 lakh plus 4 lakh. If you add, you will get one amount, that is nothing but 20 lakh. See this 20 lakh you need to write in the numerator. We have written 20 lakh in the numerator, divided by total tangible asset. Total tangible asset, asset side total excluding goodwill. So asset side total is 29 lakh excluding goodwill. Goodwill you need to minus 5 lakh. So remaining answer, that is remaining amount, is 24 lakh. You can write in the denominator. So now proprietary ratio answer, that is 20 lakh divided by 24 lakh into 100, that is 83.33%, or else 0.83:1. So that is how you are going to calculate proprietary ratio. Next is the debt equity ratio. Debt equity ratio, debt divided by equity. All these formulas we have come across while solving the previous problems. So now debt equity ratio, long term debt divided by shareholders fund is our formula. So long term debt, if you see in the liability side, only one item, that is 10% debenture is long term. All other are current and shareholders fund. So debenture value you need to consider in the numerator, 2 lakh divided by what? Shareholders fund. Shareholders fund we know, equity, preference, general reserve, P&L, that is 20 lakh. So now if you see here, debt equity ratio 2 lakh divided by 20 lakh into 100, that is nothing but 10% is the answer for debt equity ratio. Next similarly we need to calculate net profit ratio. They have asked you to calculate net profit ratio. Formula for net profit is net profit after tax divided by net sales into 100. So net profit after tax here, if you see the P&L account, net profit after tax, net profit is given, that is 3,20,000, that is in the credit side. But here what is different here, there is provision for taxation is also mentioned. Till now we came across only net profit and we assumed that that itself is a net profit after tax. But in this question they have given you net profit as well as provision for taxation. That means that net profit answer is there, right? That is before taxation. So now we want what? Net profit after taxation. So from net profit you need to deduct provision for tax. That is why here we have deducted provision for tax from net profit in order to get net profit after tax. See this 3,20,000 minus 1,76,000, you will get 1,44,000 as net profit after tax. Net sales anyways we know that is 20 lakh. So 1,44,000 divided by 20 lakh into 100, if you do, you will get 7.2% as your net profit ratio. So till now we have calculated 6 ratio. Again 6 more ratios we need to calculate. So now point number 7 we need to calculate here, stock turnover ratio. See this now, stock turnover ratio formula, that is cost of goods sold divided by average stock into 100. Again cost of goods sold we have calculated earlier while solving other ratio, that is GP minus that is sale minus GP, that is nothing but sales minus gross profit. Sale is 20 lakh, gross profit we know that is 5 lakh. So if you deduct both you will get cost of goods sold as 15 lakh. Average stock, now average stock is nothing but opening stock plus closing stock divided by 2. So now opening stock we want here, whether there is any opening stock information. Yes, in the P&L they have given you opening stock, that is 5 lakh. In the P&L itself again closing stock they have given you 6 lakh. 5 lakh plus 6 lakh divided by 2, if you do, you will get average stock. See this now, average stock if you consider, that is 5,50,000. 5 lakh plus 6 lakh divided by 2, that is 5,50,000. Now stock turnover ratio, that is 15 lakh divided by 5,50,000 into 100, that is 272.73%, or else you can say that is 2.72:1. So now we calculated stock turnover ratio. Next thing need to see is capital gearing ratio. Capital gearing ratio formula we have to understand here. Fixed interest bearing fund. Fixed interest bearing fund means those fund which regularly gives fixed interest to the holder of the fund. One is preference shareholder. Preference shareholder will get a dividend, so that is why you need to consider preference share capital. One more thing is debenture holder. Debenture holder will get the fixed interest, that is why you need to consider debenture also. So fixed interest bearing fund, only two information, preference share capital plus debenture. So if you see here, preference share capital amount is 5 lakh, debenture amount is 2 lakh. 5 lakh plus 2 lakh, you can easily calculate that amount is 7 lakh, you can write in the numerator. Now denominator, if you see, there is equity shareholder fund. So now equity shareholder fund, if you see here, they have taken 3 items here. Equity shareholder fund, what and all? Excluding preference share capital. Shareholder fund means what? Shareholders fund means equity share capital, preference share capital, reserves and surplus, profit and loss account. Now they want equity shareholders fund. Equity shareholder fund doesn't involve preference share capital, that is a common sense. So only 3 items excluding preference share capital, that is equity share capital, reserves and surplus, and profit and loss account only. So let us see that. See this here, equity share capital is 10 lakh and profit and loss account, that is 4 lakh, general reserve 1 lakh. So total 15 lakh is our shareholder fund. So shareholder fund we got, you can write that in the denominator. See this now, capital gearing ratio 7 lakh divided by 15 lakh into 100, that is 46.67%, or else you can say 0.46:1. So formula for capital gearing ratio we know, fixed interest bearing fund divided by equity shareholder fund. Next one is very easy, that is current ratio. Current ratio formula, current asset divided by current liability into 100. So current asset, if you see the balance sheet, asset side balance sheet, let us see that only 4 items: stock, bills receivable, debtors and cash at bank. So stock is 6 lakh, bills receivable is 30,000, debtor is 1 lakh 50,000, cash at bank is 2 lakh 20,000. Add all these things, you will get current asset. Current liability, again 4 items are there, that is provision for tax, bills payable, bank overdraft and creditor. So here you have calculated working capital ratio, you have already calculated. Same you can copy paste. Why? Because working capital ratio and current ratio both are same. So same answer you can copy paste here. So working capital ratio as well as the current ratio is the same. So same thing we have done here. Answer is 142.86%. That is nothing but 10 lakh divided by 7 lakh into 100. Next is gross profit ratio. Gross profit ratio, if you see, gross profit divided by sale. Gross profit given in the question directly, P&L account, that is 5 lakh. Net profit also directly given 20 lakh. 5 lakh divided by 20 lakh into 100. Gross profit is 25%. So now we solved, we discussed 10 ratio. Then again 2 more ratios are there. One is creditor turnover ratio and one more is a debtor turnover ratio. So now first we will discuss about debtor turnover ratio. Whenever we are talking about debtor turnover ratio, it is concerned with the sales information. That is why here formula for debtor turnover ratio, total sales divided by closing debtor into 100. So total sales we know, that is nothing but net sales, that is 20 lakh. Closing debtor, now very important, closing debtor you have to see the balance sheet. Balance sheet, asset side information, there is a debtor information they have given you. See this itself is the closing debtor. Why? Because this balance sheet is made at the closing date, that is 31st March 2016, at the end of the financial year. That is why here closing debtor we can get from balance sheet, that is given here. See this now, total sales divided by closing debtor into 100. So 20 lakh divided by 1 lakh 50,000 into 100. Your answer is 1,333.33%. That is debtor turnover ratio. Now last one we need to discuss here, that is creditor turnover ratio. So whenever debtor it regards to it is concerned with the sale, whenever there is a creditor it is concerned with the purchases. So here purchases, if you see, creditor turnover ratio, net credit purchases. See this now formula, net credit purchases divided by average accounts payable into 100. So net credit purchases is nothing but purchase minus purchase return. Cash purchase plus credit purchase, you get total purchase minus purchase return, you will get a net credit purchase. So you can consider here only purchase information is given in the P&L account. That is why directly you can consider that is 11 lakh net credit purchase. I will show you where they have mentioned here purchase information. See this P&L account, just below the opening stock they have given you 11 lakh. So directly you can take that amount. Now next thing they have asked you, that is account payable. Account payable information we want, average account payable. So account payable is nothing but only two information. So that is in the liability side of the balance sheet under current liability, that is creditor and bills payable. So now if you see here liability side, let us discuss now liability side. If you see only two information you need to consider under average accounts payable. Accounts payable means bills payable 1,24,000 plus creditors 2 lakh. So total 1,24,000 plus 2 lakh, 3,24,000. So this 3,24,000 you can write in the denominator. Denominator we have written, see this now, 11 lakh divided by 3,24,000 into 100. Final answer, that is 339.50%. Or else you can say in terms of percentage also you can calculate, that is 3.39:1. So any doubt in this problem?